is on pace for a record close, needs about 249 to make that happen. So we're going to keep watching that. This all after we got a hotter than expected report on producer prices. This was a day after, of course, the CPI came in cooler than expected. So who better to break it down? Joining us now is Michael Lee, strategy founder. Michael Lee, good to see you, Mike. Got to ask, are you still in the camp who sees a rate cut coming in September?
Yeah, I have been for a while. I think there is a political overtone to this Fed that we were getting that 25 basis points almost no matter what, unless we got some rip-roaring numbers. And I'd say the chances are like a 99 to 100% unless inflation dramatically increases over the next couple of months, which I just don't see happening.
Let's talk about bank earnings, because this morning as they were coming out, I was thinking to myself, this isn't going to be a market that moves higher today based on those numbers per se, yet the markets are moving higher and substantially so, Mike. So I'm thinking to myself, the market's back to we're going to get a rate cut, and that's why we're happy today.
Yeah, look, I definitely think that's part of it. A little bit of a washout yesterday. Look, these were great earnings from JP Morgan, and when you see them beat on banking revenue, like that's a sign of, I don't know if I'd say it's a healthy economy, but it's a good functioning capital markets, that deals are getting done and people are doing things. And so this is, it's a bifurcated economy with those at the bottom really hurting, and it's, definitely some issues with it. But all in all, we are chugging along, albeit not at the advertised hype that some political people might tell you, but it's good enough to move the stock market higher.
Okay.
So there's an argument out there that inflation is one of the big drivers of the gains we've seen in the stock market. If that's coming down, and if we've got this bifurcated economy that you're talking about, do we have the earnings looking ahead that can keep driving it forward? Or if the inflation reduces, do we see the market drop as well?
Yeah, those are good arguments. Those are interesting arguments. But I'd say what we've seen for the last 18 months is the Magnificent Seven. I mean, the Magnificent Seven is up 50% this year. Last year it was up an astronomical amount. But over the last 18 months, you've had the Magnificent Seven and you've had the S&P 493. The S&P 493, their mid-single-digit performance, low double-digit performance, I think is relative of an overall economy. And you have this technology trend that is going to transcend everything, and the largest technology upgrade cycle in the history of time, right? That's not an exaggeration. That's not hyperbole. It's happening right in front of us. So if inflation tempers down, I could see indexes not performing as well, simply from the rotation into other stocks as other companies will start participating in the overall market. And because these big names are such big components of these indices, you could see a tempering of the overall performance where underneath the surface you see a growth in breadth or, more stocks participating. Right.
I was reading a tweet by Dan Niles, and he was talking about some of these stocks, and he was saying Nvidia, for example, will hinge on what Microsoft, Meta, and Apple do. And so as we're watching earnings season play out within the tech space, there are going to be subtle signs of what you should do or not do, as with some of the ones that report a little bit later. What are your thoughts about Nvidia? It's up another 2.5% today. Took a little bit of a breather yesterday. There's still people who want to get in here, Mike.
Yeah, so I'm glad you asked me that, because it wasn't that long ago where the stock was, pre-split $900, $1,000, and I was telling you, this is a stock you want to get involved with. So the way that I look at Nvidia is right around $135, $140 a share is where you're at 41, 42 times forward earnings. Okay, my estimates are different than what you see on your screen, where you're probably already showing like a 50 forward PE. I think that the historical PE for this company is 35 to 40, and I think we're right near the high end of the range here. So when you're buying the stock, you're getting attached to that future growth rate, which for them I think is going to slow down only because of impossible comparables. So here the risk reward is not what it was, just a few months ago. So I don't think this is a bad name to own. But what's going to happen at some quarter in the near future is that estimates are going to get ahead of this company's unbelievable growth. And I think you'll get an entry point because a lot of the fast money will leave this name. Nvidia is not going anywhere, and what remains to be seen is, are these chips that everyone's upgrading to, is this an annual upgrade? Is this a biannual upgrade? Or is this a one and done? So that remains to be seen, and I would be buying names like HPE or Marvel or AMD right now, just because I think there's more upside to those names as this broadens out.
Yeah, I think you're exactly right, Mike. Even Intel, right, trying to get in on the game. So definitely a lot of opportunity in that chip space. Thanks so much for your time, Mike.
Awesome. Thank you, guys.